Hello and welcome to NDTV Profit. We have a new stock which has made its market debut on exchanges today, that is Akums Drugs and Pharmaceuticals, which is a pharmaceutical CDMO player offering a comprehensive range of pharmaceutical products and services in India and overseas. Well, the company came out with its IPO, the issue size of around 800 crores. To talk more about what lies ahead, we have with us the management team, Mr. Sanjeev Jain and Sandeep Jain. Well, congratulations, sir, on your listing, and now whole India will participate in your growth story.
Thank you. Thank you, ma'am. Thank you.
Well, can you start by putting into perspective the growth targets you have set for FY25, and additionally, what is your strategy for achieving these targets, and what is the vision for the company, say, in next 2 to 3 years?
Say we have always achieving around 15% CAGR growth year on year, and we are always making sure that all the we do have all huge capacities. We are the largest contract manufacturing company of the country, and we do have huge capacities lying vacant with us. We are working on around 40 to 45% of the capacity, wherein we can always increase the capacity. We are planning to set up. We have already set up few plants which are yet to be operational, and the where the market grows, we always grow, because we, being a CDMO player, we make sure that whatever the requirement come from the market, we has the capacity. We should have a capacity to make the products.
So,
and that will make sure that the growth of Akums will be there.
Right. So, as you said that we have grown 15% on a CAGR basis now. Can we see, I mean, how sustainable is this growth? Can we achieve like 20 to 25% growth in next few years, or 15% is kind of normal growth that we're going to achieve in next, say, 2 to 3 years?
See, futuristic goals should not be discussed. I don't think that this is the right time to discuss the futuristic goal, but we are very much sure whatever we have done, we will make sure that the same pace and same energy will be there. And now we have connected with so many people of the country, and those wishes will also support us to grow the business.
Okay, and as you said that the overall capacity of your business stands at around 40%. Now, what is the peak capacity utilization that you are seeing, and when can you achieve that?
Say, it depends on the product line to product line, but generally 60% is very easily achievable, and we can even go further, but we don't say target to achieve that 60%, because whenever we are say achieving around 50% of the capacity, we always make sure that one more plant or capacity to be built, so that enough spare capacity to be there for the country.
Also, Mr. Sanjeev, our EBITDA margin is currently low at around 12%. Now, could you explain the reason for this? This is low as compared to the peers that are into CDMO business, and are we expecting an uptick in EBITDA margins? Is there any room to increase these EBITDA margins?
See, in CDMO, we are always achieving around 15% for the last few years. This 12.5 is because of some lags of the business, like marketing business, like generic marketing business, and our API business. That's why, but both the business are now taking care, and the losses are not there now, are not going to be there. We will be able to achieve the legacy of the margins.
Also, and Mr. Sandeep, I wanted to ask you about the export strategy that we have. So, you wanted to scale up exports to 25% with current 17% of the total revenue. So, what are the strategies over there, and when we can achieve this 25% target?
Say, we do have 2 European GMP plants, which has not been leveraged till date, and we are already present in more than 60 countries, and so many dossiers has already been approved, and more than 200 dossiers are in pipeline. When they will get approved, and few of the products for European is also there in the pipeline, we will be able to achieve the CAGR very easily.
And Mr. Sanjeev, also, How scalable is your branded generic segment, considering it currently contributes almost 17% to revenue?
Madam ji, we are CDMO company. Our focus is CDMO only. Majority of our business and time, 98-99% of our both brothers are contributing in CDMO only. Our vision is global CDMO. These are businesses is going on as per professional management. So our main focus is contract manufacturing and export.
Okay, and also now that we are done with the IPO, we'll be debt-free post-listing. So that means our interest cost will go down, and that will impact our PAT positively, right?
Yes, right. So that is almost zero after listing.
Okay, and lastly also I want to ask you about, will your Q1 quarterly earnings reflect a reversal of put liability that we had? If yes, by how much?
The put liability has already gone post IPO. That there is no put liability lying with us. Even before that, the put liability has been exhausted. Now there is no such liability will be there in the books of accounts. It was there up to say 30th of June.
Okay. And lastly, before I let you go, can you elaborate your strategy when it comes to API business?
See, API business is a very small segment of Akums, and we are not in hurry to grow that business. We are focusing on some new niche molecules. That's it. Otherwise, we don't want to make it very big business. We are always focused. We have already focused on CDMO, and we want to maintain the same focus on CDMO only.
All right. Well, thank you so much for answering our questions, and all the best.